Let's talk to David Paul. He is the Managing Director of VectorVest UK. Very good morning to you, David.
Good morning, Mus.
Right, so we've got a number of slides to go through. Without further ado, let's kick off. The headline, bottom fishing on the LSE with VectorVest. So we're looking to pick stock market bottoms. Let's kick off with your first slide in the presentation in terms of the VectorVest UK composite market timing. Recently you went on a buy short-term, buy long-term. I assume that this latest wobble has changed the picture.
Well, yeah, over the last couple of weeks we got a red signal. I think you can see on the chart there, that last red triangle was the longer-term trend on VectorVest moving down. As we go into the trading day today, both the short-term trend, what we call the primary wave, and the underlying trend are both down. So it's certainly far, far too early to do anything as yet. And in the next slide, the picture's pretty much the same in America. Although America had a very good day the day before yesterday, pulled back a tad yesterday, but nevertheless, situation there pretty much the same as the UK, in that the short-term trend still down, the longer-term trend most definitely down. And it's too early to do anything until we get some confirmation of a bottom. I wouldn't be at all surprised to see the market go down and revisit those lows of last Thursday. I would have thought that the big money will be bidding it down around there, and if anybody chickens out, it's going to go to the beds.
Understood. Okay, so basically we're on negative in London and Wall Street at the moment. Let's talk about overbought and oversold on the next slide.
Well, yes, we have two proprietary market timing techniques. One's called the market timing indicator, which is a rate of change of the VectorVest composite, in this case the US, and a buy-sell ratio. Now, every day we put a buy recommendation, a hold recommendation, and a sell recommendation to every stock in the stock market in the UK and in the US. And when our indicators are on scale, the market timing is on a scale between 0 and 2. When the market timing indicator gets down below 0.6, that's an oversold situation.
Okay, well, let's just look at the next slide, because that basically gives us the detail.
Yeah, when the market timing indicator gets below 0.65, 0.6, and the buy-sell ratio gets below 0.25, in other words, there's 4 times more companies on a sell recommendation than a buy recommendation. Historically, over the last 20 years, that's pinpointed a major turning point in markets, where we could at least expect a bounce, or more positively, a change in trend. Notably, that happened in January, at the January low, but more notably probably when Mr. Trump was elected.
Right.
And that precipitated quite a strong move up the page. So when the general market confirms and the trends turn back up again, a buy signal from the general market, which is preceded by this mega oversold situation, is invariably a very good but aggressive trading opportunity. And that's what I'm trying to look for in the next couple of slides.
Okay, so let's move on to the next slide.
Well, the method I'm using tries to use all of the VectorVest proprietary edge, and the VectorVest edge is to find shares with great fundamentals in the throes of a strong trend, and to buy them when the general market says it's okay to buy stocks. Now, we have a proprietary indicator called the Comfort Index, which measures the long-term trend of a share on a scale between 0 and 2. And in this particular technique, I want a comfort index of greater than 1.5, which is a share that's in the throes of a very strong trend. We have a proprietary indicator called relative safety, which measures the safety and the predictability of the earnings on a scale between 0 and 2.
Okay.
And if the relative safety is above 1.3, this is a company that's making money, making lots of money, and all those financial ratios are getting better.
Okay.
So in this particular search, I'm looking for a share where the stochastic is below 20 and just coming up through 20. In other words, an oversold situation in the share. The CI is greater than 1.5. In other words, a strong underlying long-term trend. And the relative safety is above 1.3, which indicates the fundamentals are excellent. And I can scan for those, and I can scan for those every morning and get some trading opportunities. It's still too early because the general market hasn't confirmed a turn. But out of that yesterday, when I did that search, the first share that came up was McFarland, which is in the next slide here. And as you can see, McFarland has pulled back. It's come back to the last old top. It's pulled back in a three-wave pattern, which is quite positive. It's come back to long-term support. And the Fibonacci analysts watching will note that it found support at a major Fibonacci level, which is 78% of the last range. And from the lows of last Thursday, it's moved up the page. So when the general market prints a buy signal, which is preceded by that mega oversold in our market timing and buy-sell ratio, then I think the probabilities bode well for this actually resuming its uptrend. But it's too early.
Okay.
Yet.
Let's move on to the next one, Games Workshop.
Well, Games Workshop has been one of our best shares in VectorVest. When we started talking about it on here 3 or 4 years ago, nobody had heard of it apart from VectorVest customers. It pulled back strongly, and it's pulled back to a support level. I haven't drawn the trend line in there. The stochastic went below 20. It's a share that's got a great history, a safe history of making money, and I think you can see without our CI that it's in the throes of a very strong trend up the page. It's already started to move up quite strongly, and I think that when the general market prints a bottom, that we'll see Games Workshop taking out those highs relatively quickly.
Understood. Let's move on to the next one, Elan.
Elan Oil and Gas. In the next slide again, pulled back to support. It's pulled back in 3 waves. Stochastic has just come up through 20. It's growing earnings strongly, and in VectorVest significantly undervalued. Anything of a commodity nature is always more dangerous. But nevertheless, when that turns up and the general market turns up, I think that there's opportunity there.
Okay, let's move on to the next one. We've got Jim.
The Jim Group, again, pulled back in 3 waves. It's pulled back to long-term support. A great trend up edge in the share, and it's just the stochastic has come up through 20. So a great long-term trend. Fundamentals of the company are excellent, and the only thing we need to wait for now is for the general market to actually print a buy signal. The Fibonacci analysts watching will see that it's pulled back in a 3-wave pattern. It's pulled back to 62% of the last range. And again, for the harmonic people watching, it's pulled back in a Gartley pattern, which is very, very positive in my book. And the Gartley pattern has been very kind to me over the years. Okay,
let's wrap up with the last specific stock, the Craneware.
Well, Craneware is an example, Mus, of where the Unisearch that I've just spoken about worked exceptionally well. Because where I've drawn that vertical line is where it told us to buy Craneware, I think in August. And Craneware went up 50% after that. I don't expect every share to do that, but
well, you wouldn't be sitting here, right?
Well, I would be sitting in St. Bart's, maybe, yes. But we're trying to put the basics together. If we've got a share with great fundamentals, a company that's making money, and all those ratios are getting better. If it's in the throes of a strong technical trend and the general market is moving up, if you tick all those boxes, then you get very lucky. Your hit rate goes up, and very importantly, much more importantly than the hit rate, the risk to reward goes up. The amount of money you make when you're right divided by what you lose when you're wrong. And when you put those two together, then you can start making some money.
Excellent. Let's go to the final slide, your details.
Well, it's david.paul@vectorvest.com. We're at the Investors Show tomorrow in Hammersmith, stand E9. Anybody that wants to come along to the Investors Show. I've got 3 presentations during the course of the day, and it'll be great to see you. Please come along and just tell us that we saw you on Core Finance.
David, thank you very much indeed.
Thank you, Miss.